Good morning. It's Market Day Report. So glad you're with us, and more importantly, just thankful that you give us the opportunity to spend a little bit of our day with you. How about we jump in and check how markets are opening up? Well, the corn market is in mixed territory. That old crop is a tick lower on the front 2 months. March at 434.5. Now down a half penny. We're opening in a 3-cent trade range on the March. December is the crop we'll put in the ground this spring. And December is trading in a 3-cent trade range. We're at 461 3/4, up 3/4 of a cent. Now, it's important to keep in mind what happens during the month of February with these markets, and we'll explain in just a moment. Here's soybeans, and the March contract, 1128.5. It's up 16 1/4. Look at every one of those contracts, including the September now, up above $11. What's driving this? Well, it's China, and it looks like they could be purchasing 8 million more metric tons of U.S. soybeans. Here's the wheat market, and wheat in the red. You know, wheat has lost 8% of its value year over year, down a penny, 553 3/4. Here's hard red, July, penny and a half lower, 562.5. And finally, cotton market. And the new crop at 68.10, it's up 10 points. Brady Huck's with EmpowerAg. He's in Dodge City. Brady, I mentioned we watch the markets pretty closely here in the month of February. Why?
That's a good month for to be watching these markets, and a lot's happening in February. But one of the biggest things that's happening right now in February is the discovery of that pre-plant crop insurance price. So we get crop insurance prices are being set right now. And if we look back at last year, corn posted a 470 pre-plant price, and the board's now right around 460. So a little softer on that corn. Beans posted a 1054 pre-plant insurance price a year ago, and with the board just a shade under $11, we're a little better there. So got to watch that corn bean ratio as well here in the month of February when we're setting those prices. That sets that acreage guarantee and impacts those planning decisions of how many dollars do I got protected for each crop. And right now, beans may be trying to buy a few more acres than they were when we compare it to a year ago. That corn bean ratio a year ago during February was 2.24, where today we're looking at a 2.38 on that crop insurance pre-plant price.
Okay, so on that ratio, for those who don't know, what are you looking? What's good? What's good for beans? What's good for corn? How do we discern that?
Right. Yeah. So typically, as you get higher in that ratio, that 2.4 level, the bean market's buying more acres or favoring more bean acres. Now, that's the futures price ratio, and there's also a cash ratio, and we got to take in local basis and your traditional basis areas and regionality of that. That makes a big difference as well. So there's going to be some acres that I think are kind of set in stone with a traditional rotation, but those fringe acres or flex acres, that's really where this ratio comes in and shifts the acreage pie a little bit.
And then in your state where you're growing cotton as well, and you're looking at nothing really good in that cotton market, you could see acres switching out of cotton to something else to at least cash flow through there. Hey, Brady, hang on just a moment. Coming back on the other side, we're talking livestock. This is Market Day Report. We talk about live cattle, and you'll hear us talk cash trade. Now, we never show a screen with cash trade because that's what's happening right now, right here on the ground. But I think you can look at it like a balancing act, if you will, okay? The scales, where if cash starts doing one thing, then ideally the live market will have to even things back up and vice versa. I throw that in because look what's happening with live cattle right now. $239.25, it's up $4. We did sell some cash cattle in the north, 238 to 240, just a few. And right now we're passing on bids of 240. So maybe that's part of the rally here in the February contract, up 415 at 239.40. Now we get over to the feeder side. Feeders have gained 2% month over month. Again, just steady grinds here with the March at 370.35, and that's up $6.27. And speaking of grinds, we'll work Argentina into the conversation in a moment. First off, here are hogs. 52 higher, front month 87.82, and that June at 111.60 is up 105. Brady Huck is in Dodge City, EmpowerAg. All right, Brady, is that a good way to look at it, the scales between live and cash?
Yep, live's going to drive the market. Cash is going to be king out there, so we always got to watch what that cash trade is doing. Good to see this cattle market bounce back after a scary day yesterday. So feeders up 6, fats up 3 to 4, hanging in there. That's good. Resilient market. Funds, when they're long, you have headline risk, and we saw a lot of that yesterday, flushing out on the future side of things. But we got a little stability here, and good to see us back maintaining at these levels. So boxes softened yesterday. Choice slipped another 77 cents, and select dropped $1.72. You'd like to see boxes moving higher, but seasonally, we look at that cutout, and we can typically chop in this time frame. So any strength we see right now, January, February, is a good thing, and it's pretty strong. Much of that strength's led by the chuck and the round. And if you look at those primals within the cutout there, seasonally, just they stand out when you look at a chart versus where they've been the past 4 or 5 years. And the chuck and the round, Tony, they account for about 50% of the cutout. So they can really move the box beef values when there's strength there. So, yeah.
Well, I was just going to say we're looking at both the live and feeder market here again. What else are you watching?
Well, we had the plant strike headline yesterday, and certainly shook things up. Gosh, if I was a laborer out there working, this is not the time I'd want to leverage a plant that we're going to shut down and not show up to work. When a Packer's bleeding red ink, they may be okay with shuttering the doors right now to prevent some of that bleeding. So I don't know. Going to shuffle some things around a little bit when it happens, if it happens, and we'll keep our eyes on that situation. But a lot of things happening. The cattle market is not for the faint of heart, and if you're a producer out there, I think you got a good opportunity to go out there and button up some risk management. But I don't want to stand in front of this market either. Bears have been getting run over for the past 3-4 years, and I don't know if that has to stop anytime soon, Tony.
Yeah, good points, Brady. Great to see you. Have a great weekend. Brady Huck, EmpowerAg in Dodge City.